Hello from a rather glorious Wednesday the 12th. I'm FX Blue and this is the market brief. So the Queen was on. She introduced her government's agenda of new bills. They're all expected to be business as usual for the Tories with their 80-seat parliamentary majority. But now that the coronavirus threat level has been downgraded and the lockdown restrictions are scheduled to end, dear old Boris probably needs to revisit his election manifesto. Brexit needs to deliver some of the social and economic benefits that were promised. Understandably, new trade deals have been slow to materialise, what with the pandemic and all that. But the government did promise to remove a lot of the red tape to free up international trade, and the Irish border, the issues there, coupled with the logjam at the Channel crossing, suggest evidence to the contrary. And then closely related to Brexit, there's the prospect of a second Scottish referendum. To allow Indy Ref 2, chances are Boris would insist on a majority, in the region of maybe 60%, which would be quite a swing from the 45% voting for it in Indy Ref 1. The polls for Indy Ref 2 show Scotland is pretty evenly split over independence, but one thing that the recent election demonstrated pretty clearly is that voters want more power transferred north of the border and away from Westminster. Now that ties in nicely with Johnson's promise to devolve power away from the southeast, and indeed the Tory victory in the Hartlepool the Hartlepool by-election presents a good catalyst to fulfil that promise. We'll see though, as we know actions speak a lot louder than Tory promises. Do you think we'll see a Indy Ref 2? Sterling remains pretty well supported, but is struggling to make fresh highs. Yesterday we saw 141.65 against the dollar. We opened this morning around 141.20 though. Over in the US, we've got inflation due out today. Year-on-year CPI might look pretty hot, and some forecasts suggest that even inflation could climb to 3.5% this year. We can expect the Fed to be pulled into the debate around their plan to deal with rising inflation versus their current wait-and-see approach, even more so since Non-Farm Friday. That miss spooked the markets last week. The dollar index continues to demonstrate a loss of risk appetite, concerned that April's employment number may not be a one-off. We broke the 90 level and euro-dollar continued to ride high on the dollar weakness. We saw 121.80 yesterday, but again we opened slightly lower around 121.30 this morning. Right, that's it from me. Have a great day. I'm off to London town this morning. Even ironed a shirt, first time in a year. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.